One of our biggest financial milestones in life is buying a home. From saving up for a deposit to applying for a mortgage and having it approved is a dream come true for millions of people around the world. Buying property is also one of the best investments we can make. Even if it doesn't appreciate in value, it still means that we are paying ourselves rather than a landlord. But one of the biggest concerns for homeowners is the interest they pay on their mortgages. While today's record low interest rates might be bad news for savers, it spells great news for homeowners looking to refinance their mortgages and reduce their monthly instalments. Unsurprisingly, there's been a huge jump in the number of people refinancing their mortgages over the past year as interest rates remain at near zero levels. Welcome to Pocketful of Dirhams. I'm Felicity Glover, the personal finance editor at The National. Joining me today is Brendan Kennelly, a senior mortgage consultant at Mortgage Finder, the Dubai-based independent home loan specialist, who's here to give us his expert advice on how to refinance your mortgage. Welcome to the show, Brendan.
Hi, thanks for having me on.
Tell us more about this trend of UAE residents refinancing their mortgages. When did you notice it happening?
Yeah, so it's quite a recent trend that we've seen, and it's more to do with how attractive the mortgage rates have become of late. That's one of the factors. And another factor is that refinances can now be done up to around 80% loan to value. So some banks were doing that over the last few months, and more recently, a lot more banks have come into the market being able to refinance at 80% loan to value. So that's making it more attractive for people with existing mortgages.
Can you tell us what percentage it's grown by over the past year or so?
Inquiries on our website, so people that come onto Mortgage Finder, around about 8% of those inquiries between 2019 and 2020 have been for buyouts or refinancing existing mortgages, with the remainder being buyers of properties. So I expect this year to see a lot more inquiries and a lot more interest because of how substantially the interest rates have come down recently.
How long do you think those interest rates will remain low, though? I mean, they can go up at any time, but I'm guessing with COVID-19 at the moment, they will remain near zero for some time to come.
Yeah, exactly. I mean, the expectation is that the interest rates here are going to remain low for at least the next 5 years. The US Fed recently made a statement to that effect. And as the dirham is pegged to the US dollar, interest rate movements there have a direct impact here in the UAE. So as I say, the expectation is that interest rates will remain low and possibly go even lower for the next 5 years or so.
That's incredible. I mean, it's not good for savers, of course, but it is very good news for borrowers, yes?
Exactly. Yeah, 100%. I've been out here, just over 6 years doing mortgages. Some of our directors have been out here 15 years or so. And, we've never seen mortgage products, interest rates, overall offers as attractive as they are now.
That's interesting. So tell me, I mean, just hypothetically, I don't own property here in the UAE, but perhaps I will one day, especially now with the interest rates set to be at historic lows for the next 5 years. Why would I refinance my mortgage, for example?
Yeah, I mean, the main reasons are obviously to get a lower interest rate. Now, what tends to happen is clients will have a mortgage with a bank that they might be on a fixed rate, and then they go on to what we call a reversion rate. Now, 3-4 years ago, these reversion rates compared to today were high, but at that time they were in line with the market. So if you took a mortgage out, say 3 years ago at a fixed rate of say 3.75, you might be coming off that rate now, and the margin might be something like 3% plus IBOR. So at that time, 3 years ago, that was in line with what the other banks were doing. Now, a margin of 3% plus IBOR, with potentially that bank having a minimum floor rate of maybe 3.99%, is high compared to what other banks are offering now.
So a reversion rate is always going to be higher once you come off your fixed rate, is that right?
Historically, yes, But now, with the offers that we have available from the banks today, the actual reversion rate that clients will likely be going on to after, say, a 1-year fix or a 3-year fix or even a 5-year fix, the interest rate thereafter with the products we have today will actually be lower than the initial fixed rate.
Ah, okay, I get it. So I wouldn't have to necessarily switch banks then.
Yeah, I mean, what I'm saying to clients now who are thinking, who are either taking a mortgage as a first-time buyer or refinancing, is that in all likelihood, if you take the mortgage with the offers we have today, or you're refinancing with the offers we have today, it will be highly unlikely that you'll have to refinance that mortgage again.
That's very interesting. So what are the pros and cons of refinancing a mortgage? I mean, there must be costs associated with it, for example.
Ballpark figure, the costs are around 15 to 20,000 dirhams to undertake the refinance transaction. There's things like a new valuation fee, a mortgage registration fee, a mortgage deregistration fee, and some other fees as well. The main pros are obviously lowering your interest rates. What we've had of late as well is life insurance premiums on the mortgages have been reduced considerably. So if you're taking a mortgage with a new lender, you would be able to avail of the reduced life insurance costs.
So how much lower are life insurance costs now?
Yeah, so if we were having this conversation even, say 6 months ago, the life insurance generally for a single person was around about 0.4%, so 0.4% per annum, which when you add that onto the mortgage interest rate, it can make quite a big difference. Now they're as low as 0.14%. So it's a substantial reduction.
Okay, so now we've established, for somebody like me who doesn't own property, but hypothetically speaking, I've decided to do this. I've decided to refinance because I'm going to be saving money. What are the first steps that I would take to start this process? Do I go to somebody like you from Mortgage Finder, or do I go to my bank? Are there ways for people to help me do this?
Yeah, exactly. I mean, if you've got an existing mortgage, the first port of call really is with your existing bank. You can have a conversation with them. You can ask, you can say, look, I'm on this 3% margin with IBOR and there's a minimum rate of 3.99%, for example. And you can say to them, look, what's the best you can offer me? I don't necessarily want to refinance. I want to stay with you. And the first port of call should be to speak with your existing lender and see what terms they can offer you to kind of retain you as a client. In parallel with that, you can speak with a mortgage advisor who has good insight into what all the banks are offering and get an indication of what the best offers in the market are. And at least then you can compare with what your existing lender may be offering you and what other banks could offer you. If your existing lender offers you, something that is in line with the market and what the best offers are in the market, you would stay with your existing lender. There's no doubt about that.
So, but it's always good to shop around just to see what rates are out there.
Exactly, yeah.
Okay, so once the refinancing has been approved, and there is, there is quite a big difference in savings that you'll make. But how long would it take to offset that, the cost of refinancing the mortgage versus the savings?
On a mortgage of, say, 2 million dirhams, the costs of around, say, 20,000 dirhams would probably take around 12 months to kind of balance out. As an example, if you were on a 2 million mortgage, if you were on an interest rate of 3.75% with a remaining term of 23 years, your interest costs on that would be around 940,000 dirhams. Now, if you took a variable rate, which obviously fluctuates, hence the name variable, and that was on an interest rate of around about 2.14%, you could save around 430,000 dirhams over the remaining term of the mortgage. So it's quite substantial saving that could be had.
Absolutely, that's quite amazing, and I'm surprised that not more people are doing this at the moment. But I'm sure, as you mentioned earlier, that you'll probably be seeing an influx of this happening this year.
Exactly, that's the expectation. Yeah.
So what if I went to a bank? What if I'm with an existing bank, and I go to another bank and tell them that I want to refinance with them because I like their rates. But what if they didn't approve that? Can I then approach a new bank, or do I just, give up and start renegotiating with my current bank?
No. You can approach as many banks as you want. I've got a vested interest in this, and I would say, to speak with the mortgage advisor, as we're dealing with all the different banks day in, day out. If a bank was to decline a client, there must be a reason for it. Some of these reasons can be addressed and rectified. And just because one bank has declined a client, it doesn't mean the next bank would decline the same client. So each bank has their own lending criteria, has different appetite for different client profiles. So if you are declined, or if a client is declined by one bank, there's plenty of other banks out there that would probably give them a mortgage.
You mentioned they've got their own reasons. Can you tell me some of those? I mean, would it be they're concerned about repayments, or maybe something that turns up on a credit report?
Yeah, exactly. We can all access our own credit reports. We can download the app, the AECB app, and we can see what the banks will see when they're reviewing our application. It costs like 105 dirhams. As I say, we can do it ourselves before we go through the process if we want to do some extra due diligence. Yeah, and some banks might have kind of limitations on certain sectors that they'll lend to. As an example, some banks restricted lending to the aviation sector recently, to hospitality, with recent things that have gone on. So the banks tend to have their own lending criteria and sometimes limitations on who or what industry they'll lend to.
And just going back to, a fixed rate kind of scenario, what if I wanted to stay with my current bank? I didn't want to move and, sort of incur all of those costs and things, sort of switching everything around and whatever. What if my 3-year fixed rate is about to end, for example, and I wanted to stay with my current bank? What are your best tips to get the best rate from my current bank?
Yeah, so it's really having a dialogue with them. Use the leverage that you might go to another lender. The central bank regulation states that the maximum any bank can charge a client to move to another bank is 1% capped at 10,000 dirhams. So that's across the board. That's the same for all the banks. So that can be used as leverage to try and get a good deal from the existing lender.
Okay, and what about how many times can I refinance my mortgage? Are there limits on this, or is that for the term of the home loan? And if it's, fixed rate and, sort of say it's the end of a 3-year fixed rate or a 5-year fixed rate, I could do that every 3 to 5 years perhaps.
Yeah, exactly. There's no limitations on how many times you can refinance a mortgage. In reality, clients wouldn't want to go through this process every few years. But as I mentioned earlier, with the products that we have available today, with low margins after the initial fixed rates or no floor rates, I believe that the offers that are readily available today wouldn't need refinancing in the future.
And what do you think is better? Would it be a variable rate or a fixed rate?
This is really down to personal choice. The fixed rate obviously gives comfort for a period of 1 year or 3 years or 5 years or however long the fixed rate is in place, that your payments will remain the same for that period. So you can budget accordingly. You can fully understand what your payments will be for that certain period. With a variable rate, that obviously goes in line with IBOR, so the Emirates Interbank Offer Rate. So that can fluctuate. But generally, you pay a slight premium for the fixed rates because it gives that added comfort of what the payment will be. With the variable rates, currently, they're below the fixed rates. They have the ability to go up and down, the repayments.
Yeah, okay. But at the moment, the variable rate and the fixed rate are both quite low anyway, right?
Exactly, yeah.
Yeah, okay. And I guess it just depends if you want to, have something that's consistent and the same across the board, for 3 to 5 years, or if you want to live a little bit on the edge and, kind of look at variables perhaps.
It's kind of like an educated risk as such with the variable rates at the moment, because as I mentioned earlier, the expectation is that interest rates would remain low for at least the next 5 years. There's an element of risk, but I would say it's mitigated by what the US Fed have kind of stated recently.
You're saying, that rates could stay low for up to 5 more years. But suddenly what happens, after that 5 years? rates suddenly shoot up. What should homeowners do if that happens?
Any kind of interest rate movements are all very, very gradual. It takes time for IBOR to increase or decrease. There's no kind of sharp spikes or decreases that would be seen in interest rates. So that you would kind of anticipate the trend of interest rates going up or going down, and you should be able to kind of anticipate what the banks are offering with interest rates. If there was a trend for interest rates to start increasing, you could, at that stage, try and speak with your bank and say, look, I can see interest rates are on an upward trend. What kind of fixed rates can you offer me now? Or you can speak with other lenders and see what fixed rates they're offering and potentially move at that stage then.
So if I'm on a variable rate, does that mean that I can change it whenever I want?
Potentially, yeah.
Okay.
You could change it by going with another bank, or you can speak with your existing bank. And again, it's open for negotiation. You can speak with them and potentially take out a fixed rate with them as well.
And finally, what are your top tips on refinancing a mortgage? I mean, is there anything that homeowners should be aware of to get the best rate possible? Is that more about soft skills, negotiation skills? What would you say that could help consumers do this?
Yeah, so I mean, the main factor is the current market value of the property, because any mortgage that you will take to refinance an existing mortgage is based on the current market value of that property. No matter what you paid for it 3 years ago, 5 years ago, 10 years ago, that doesn't come into play. It's the current market value of the property today. So what I would suggest is do some research on what you think what the current market value of the property is. Look online, check on Property Finder, check with maybe the estate agent that you purchased the property through originally. They should have better insight into the market and the community where your property is located. Get a good understanding of what the current market value of the property is. Now, as I mentioned earlier as well, the loan to value, which is the mortgage amounts as a percentage of the current market value, the mortgage can be refinanced up to 80% of the current market value. So if you're at 100% loan to value, i.e. your property and mortgage amount are the same, depending on the property value, obviously, without putting a substantial amount of cash into the mortgage, it would be unlikely, or depending on your situation, that you would want to refinance the mortgage. If you're around 80% or below, and you may have some additional cash that you want to pay down on the mortgage, it's more feasible.
Excellent. Thank you very much for joining us this week, Brendan.
No problem. Thanks for having me.
If you would like advice on your personal finance issues, you can write to me at pf@thenational.ae. And remember, PF stands for Personal Finance. Please do subscribe to Pocketful of Dirhams on your podcasting app to receive weekly updates, and also leave us a review so we know what you think. This episode was produced by Arthur Edison, and I've been your host, Felicity Glover.